calls of the day. Maybe the best stock in this market. I know Josh has his list, but I think I'm going to have mine. Netflix. 1425 is the target, was 1200. Oppenheimer, you could just add them, Weiss, to the list of companies that have chased this stock on the up and up. Let's take a look at a year to date, please. Weiss.
Look, I mean, the stock, I want to say it weakened a little, but it's still on a percentage basis, really trading at size. But it weakened a little when the Hulu news started coming out, and that made no sense. So to me, this is a perma hold. It's a permanent compounder. They still own this space. They're number one in it. And as the economy gets tougher, and we'll talk about the consumer later, I believe, Scott, but as the consumer, as it gets tougher, they're going to decide, where do I want to spend? They've got their ad-supported streaming service. I just think that this one is, is one that looks great.
Yeah, it's been offense and defense. Yeah. And there aren't that many stocks in this market that have been able to accomplish both, given all of the news flow and the headlines. It's just managed to stay above the fray. Even if you're concerned about the economy, now that you have other tiers, like an ad tier, okay, you don't want to spend the full freight, go ad tier, and you're still getting the subs. And
it's recession resistant. You still have cord cutting. I mean, we're beyond the bulk of it, but it just has so many tailwinds.
NRG, outperform Raymond James, 326, not 325, Rob Sechin, but 326. I don't think it's a typo. 326 is the price target here. What's your take?
I think that's right. Listen, this is a company that we added in January of this year. It's up 69% since, second best performing stock to Palantir. When we look at it, natural gas will be the key to solving the bottleneck in data center power consumption, and NRG is incredibly well positioned for that. Its valuation's no longer cheap. It's still at 18 times. This is a multi-year story. It's benefiting from both increased loan growth and consumer data center power consumption. So we like this, and it's a little cheaper than Vistra, which we also own, and sold to buy this, a little bit of it to buy this.
Air Products, Surratt, initiated outperform 355 at RBC. They're bullish on 1, the return to the core industrial gas model. 2, the turnaround plan. 3, re-rating to 25 to 30 times PE multiple. What do you think?
So 1 and 2 is really important to the story. You've got a new management team in there that is now focused on the core business. They got rid of all their other businesses outside the U.S. that were not cash flow producing. The other part that was not mentioned is an industrial gas company like Air Products has long-term contracts. When you have long-term contracts, you secure the future revenue, and you also have inflation hedges against them. So that's why a company like that deserves a premium multiple. Their comp is Linde, which trades at over 30 times earnings. If they can even get close to that, you're going to see a good pop in the stock, and you get paid 2.5% dividend yield while holding it.
Rob, Wells Fargo says Abbvie is a signature pick. They say it again. They reiterate it. $240 is the price target. Thoughts?
It's up a good bit year to date, up 10%, really outperforming the market. PE's 15 times. It's a high-quality pharmaceutical company with consistent top-line growth off of Skyrizi, Rinvoq. They're also focused on Botox, arthritis. It's a high-quality business. I think this is one you can own. The total dividend yield 3.5%.
That chart looks pretty good, I'll tell you.
Of Abbvie? Yeah. That seems to be the most favored biotech / healthcare related name on the desk.
Yeah, but without a doubt. I may be the only one who hasn't owned it over the last 5 years.
You bought back UNH, is that true?
I did buy it back, and as you recall, when I sold it, I wanted to see if there were any other skeletons in the closet, so to speak. They got through their analyst day, their investor day. Some had thought that they'd pre-announce and give guidance, but that'll be in the second quarter. Again, I know Steve Hemsley, the CEO. I know John Rex, who's the president, CFO. Very steady hands on the wheel. And look, they made a mistake in underwriting the amount of business they took. And V28 is largely behind them at this point, but it's going to be a kitchen sink quarter, and the guidance you can count on. So that will be the relief rally, and you'll see it continue to move up. I actually bought some more today.
You got any other cliches? Kitchen sink?
No, but there are certain names I want to drop. So
Skeletons in the closet. Clean bill of health. You didn't use that one. You didn't use that. You gave them.
Well,
that.
I thought it was too close to home with a healthcare company.
Okay.